My name's Jeff Moore. I am president of the Plus Group. I run Diversified Brokerage Specialists here in Cincinnati, Ohio. We've been disability specialists since 1946. We're a fourth generation agency. Since my sons joined our firm, my grandfather founded our firm as a disability insurance brokerage, one of the first in America. And today we're going to talk about selling disability insurance, a great product, an important product. And my dad always told me that if you want to make money in the insurance business, you have to be working with people that make money and preferably make above average money. And the DI market can get you into space. Being a successful disability salesperson is approaching the right clients, having the right clients. Many of those are college educated, those with degrees, those with an education worth protecting and insuring, certainly businesses, family people, and as I mentioned, professionals, physicians, attorneys, architects, engineers. But I want to start by saying there's one big difference in disability insurance than other products you might be selling, like homeowner, medical, auto insurance, even life insurance. People, for the most part, have to buy those insurance coverages. They do not have to buy disability insurance. So a big part of talking about the need and convincing people about the need and why they need DI coverage, not jumping right to the proposal. That's the mistake too many people make. But first, let's talk about why sell disability insurance. Do you know anyone that has suffered a disability? If you don't, we've got plenty of stories of people that suffer disabilities. And this is the reason it's called the living death. It's worse than the death because you have to live through your death. You have to watch and see for your own eyes the ramifications of being unable to work and bring in a paycheck, and that is lifestyle as well as on your family. People do understand the problem, and in today's uncertain times, life insurance sales are moving up, disability sales are moving up. With the pandemic that we're going through, people certainly understand the problem. And I always tell agents and consumers, all these hospitals, all these medical facilities, they're not empty. They're there for a reason. People do get sick, they get hurt. All you hear on the news and TV are about people that died. You never hear about 10 times that amount the people that are disabled, the people that survived and recovered, but they've got permanent lung damage. They'll never work again. There's a lot of people they're out at the shopping mall or at the baseball game because they're not able to do those things. Many times, disability insurance is a better door opener than life insurance. Any number of times, agents are able to get in, with a professional talking about disability insurance. I have stories of advisors finally managing someone's money that they've been after for years because they brought up disability insurance. And the fact that their existing advisor never brought up income protection and disability insurance, they actually fired their financial advisor and now is making all their money. We've been told that twice by different advisors. And if two guys told us, there's probably 10 times that many who did that and didn't tell us. So disability producers sell a lot of life insurance. I've been in any number of appointments where after placing a DI policy, the client pulls out of his drawer 2 life insurance policies, throws them on the table and says, what can you do with these? So DI is a great way to open doors and to open doors to high income people. You'll build a better relationship with the client because the check is going to them. You're writing insurance that is going to pay them, not their spouse, not their children, not estate taxes, not like life insurance where they have to buy it for someone else. People, for the most part, do not collect off their life insurance. They do collect off their disability. So it's great for a good relationship with your client, a closer relationship, great for referrals. And again, target the right products. One, disability insurance. We know it's easier to sell DI to people making over $100,000. Not that everyone doesn't need DI. We're going to talk about that. And the real key is affordability. But disability can also help you develop a market in certain professional occupations. If you're dealing with a physician, you sell a couple of physicians, you should be able to get referrals to other physicians. Likewise with attorneys. So a lot of agents that I've worked with over the years have specialized in certain occupations, generally professionals such as physicians, attorneys, dentists, architects, engineers, etc. And the commissions are unlike you'll want to do. You have vested commissions, vested renewals, trails that can last for many years and have a big impact on your income. And again, the key to being successful is targeting the right prospects and keeping the price affordable. The two big things I want to emphasize today are convincing people of the need and keeping disability insurance affordable. If you're making any notes, those are the two things to keep in mind. And again, this webinar will be recorded. Please use it to your advantage and share it with your associates and those wanting to get into the disability insurance market. There are 4 steps to selling. You know this better than I as insurance salesmen. The problem is with too many products, we start with step 3, the proposal. The proposal has the worst thing on it that your client will see, and that is the price, the one thing they don't want to see. So you don't want to start with step 3. You need to start with step 1. Identify the problem. What is the problem? Well, the problem is, what are you going to come to work? Step 2 is the solution. We have to take time to explain the solution, the product, the features, how ONOC works, how inflation protection works, all the great features of a DI policy, waiver of premium. If you go through step 1 and step 2 properly, you're going to build an interest, and you'll just see their interest building as they learn more and more about disability insurance and what it can do for them. Step 3, making the proposal affordable, and step 4 is taking the application. So step 1, the problem, having the open conversation, is about understanding people know that they need this. It's just good to have some stories to tell them about, different claims, people you've worked with, things that have happened. Ask them, please tell me about yourself and your family. Who, in addition to yourself, relies on your income? That's very important. It's not just up to them. It's about everyone that relies on their income. What would happen if you couldn't work? Where are you going to get income? And most people realize they cannot count on the government. And even if they do, it's not going to be nearly enough. With our disability plans, if the government pays, that's additional money in their pocket. So have they ever explored a disability insurance policy? And if they haven't, why not? Everyone plan. No is a plan. What's their plan? Fact of the matter, if they are disabled, there's going to be tremendous financial and emotional consequences, not only on themselves, but on their entire family. So talk about that. What would the financial and emotional consequences be if you became disabled? Now, here's a sales idea that dates back to the 1940s and 50s. It's called Job A and B. And very simply put, let me ask you, if you had a choice of 2 jobs, Job A pays 100,000, but if you become disabled, you get zero, you lose your job. Job B that pays just 2% less, $98,000, but provides disability. Matter of fact, it guarantees that you'll get 60% of your pay tax-free all the way to Social Security retirement age. Knowing this wonderful family you have and this house and these commitments and the mortgage and college in your future for your children, which job would you take? And most responsible people, which is the other thing you need to be working with, responsible people, are going to say job B. You need to get them to make that agreement right out of the gate. There's no reason to warrant on a quote. There's no reason to do anything until they agree that, yes, if I had a choice of two jobs, I would take job B because I value family, protect my income. I would be willing to make 2% less and have disability insurance. Then it's time to get a quote. If I can deliver that for 2% of your pay, would you be interested? Yes. Okay. Let me get a proposal for you. Ask people what's their greatest asset. We know what they're going to say. Their house, their car, something they own that is expensive. Well, honestly, their greatest asset is their ability to make a living. If you look at this chart here, someone making $100,000 at age 40, let's say they're making 100,000, that's 35 years to age 65. That's $3.5 million right there that they're going to make over the next 35 years. Now, this chart has some pretty aggressive salary increases built into it, showing $9 million as income. But you can just do the simple math. 3.5 million, 100 grand for 35 years. That's a lot of money. It's worth protecting. And Finance 101 tells us the financial pyramid, insurance, income protection, that's the basis. You do not move up the financial pyramid until you've knocked out all these things in this order. And family. About family and your loved ones. Are they worth it? Is it worth 2% to protect your family? Step 2 is the solution. What do you get for what you're paying for? Well, go through the product brochure. A lot of DI proposals have a lot of that in the proposal itself. The definition of disability, the explanation of all the riders, and the basics of a disability policy is renewable or just guaranteed renewable. The policy is always renewable to age 65, generally at the current rates. That's why you want to buy disability insurance while you're young. Non-cancelable means the premium can never change. So the younger they buy, the cheaper the price. Guaranteed renewable means they always have to renew it. If it is just guaranteed renewable and not non-cancelable, they could raise the rates if they do it for everyone in your state. It's highly unlikely. I never have heard of a case where they go up by more than 10%. For the most part, all DI policies are written on a level premium. The benefits are received income tax free. They're generally protected in their occupation for a minimum of 2 years, many times for the whole benefit period. You want to have residual or partial built into the policy so that if they're not totally disabled, they can still collect one way or the other because they have a loss of duties or a loss of income. Limited period is their waiting period. Do they need benefits quickly after, say, 30 days? Or are they of an income and situation where a 90-day elimination period is more appropriate because that saves them a lot of money? The benefit period, age 65, 67, we can go to age 70. You can have a 2-year benefit period, a 5-year, a 10-year. Something is always better than nothing. If they're disabled, they do not pay premiums. There's a feature called waiver of premium. If you're on claim, you do not pay premiums. We have future purchase options, which guarantees a young professional that in the future he can increase his DI, put up his income without having to go through an exam or having to answer any medical questions. Now, there's some other riders that we add very carefully on the right cases because they increase the price, like cost of living adjustments, catastrophic benefits, which is like if they need care, they can get extra benefits to pay for care on top of their disability benefit. And we have a lot of discounts for non-smoking, for multiple lives, for a 2-year limit on mental nervous conditions. There's a lot of ways to build in discounts. We've got a lot of association discounts that we've developed over the years, and using discount to afford. But as you talk to people about the need and the importance of protecting their paycheck, protecting their family, protecting their career, and then how good the benefit and the policy is in protecting them in their occupation with tax-free benefits all the way to Social Security retirement age with residual and partial benefits, possibly inflation protection included, creates a very, very nice package. Now let's look at a proposal. This is a typical proposal that we're all used to running for white-collar professionals. This is a 3A, which is just a mid-ranged average professional making 60, 70, 80, $100,000 a year. It could be a contractor that's still going out to the job site, an owner. There's a wide range of occupations that fit a 3A. Now, in this case, we've got someone making, say, $60,000 a year. So 60% is 36,000, about 3,000, 3,600 a month. So they've got 60% of their income paid tax-free after 90 days, all the way to age 65, with own occupation coverage for the benefit. Meaning they can't do their job and they're not working, they're going to get the full 3,600 a month. We've got pure ONOC. We've got ONOC as a rider. That means even if they go to work somewhere else, they still collect the full benefit. The way this is quoted, if they go back to work in a different job and make half of what they used to make, we would still pay half of this benefit under residual. So we're protecting them. We're protecting them in their occupation. We've got the benefit update, the future purchase, a couple extra features built in at no cost, capital sum, presumptive, and a supplemental health benefit. We've added residual, which is a cost rider, which I wouldn't sell a policy without that. And total cost for the riders, then the total annual premium before discounts. We've got the 10% mental nervous discount. Mental nervous is covered for 24 months for 10% savings for a total premium of $1,411 of their income. A little more than 2% at 60 grand. 60 grand would be 1,200 a year. This is 1,400. We want to try to keep DI in that 2% range if we can. Now, this is a 37-year-old. Obviously, a 57-year-old is going to cost more, but we just have to deal with that. Maybe you would want to show a 5-year benefit period, get it back down to the 2% range. So you've got a lot of flexibility in these quotes. Each quote shows a lot of options. But remember, they're not paying $1,400 here for $3,600. They're paying $1,400 for $1.2 million. That's what this client would collect if they were disabled and collected benefits all the way to age 65. $600 a month all the way to age 65 is $1.2 million. That's what you're buying. It's in every quote. You have to talk about that and show that. Because DI does cost more than term life insurance. I'm sure this client could get $1 million of term life insurance for maybe, $800 a year, $900 a year. Well, here, 1.2 of tax-free income, and disabilities are 5 times more likely during your working years than death, it's just $1,400 a year for a potential benefit of $1.2 million. So it's very important, we'll go through the quote, to follow step 1 and 2, make your case, show an affordable quote, try to keep it within the job A, job B sales idea of 2%. Now, what we also want to help you do is broaden the people you're selling disability to. We can sell DI to a wider range of people making less than $100,000 a year, even blue collar occupations. People doing manual labor and more blue collar type occupations, they do pay a little more for DI because the risk of becoming disabled is greater. But here's an excellent quote, a very popular way to sell disability insurance in that market, because we've learned through this crisis that a lot of people are living paycheck to paycheck. They would have tremendous difficulty day. So the middle market, let's show them a 30-day plan for a 2-year benefit period. Here's someone making $50,000 a year, blue collar. We can get them a 60% benefit of $3,000 a month tax-free after 30 days for 2 years. We've got partial disability in there, a lot of good riders, and we added return of premium. This is a good savings plan as well, because at age 65, they're going to get all their money. Now, if they didn't want return of premium, instead of $110 a month, it would be $80 a month, because you can see the cost of return of premium is $30. So it goes from 110 to 80, which again is bringing that, under the 2% mark. But return of premium is sold on close to half of the cases sold by Illinois Mutual, our leading carrier for blue collar. Assurity has return of premium also. We've got, a wide range of DI companies through the Plus Group to help you with. Now, the way return of premium works is this illustration here, which is every 2 cases. You go without return of premium, and the premium, as I mentioned, is $894. And by age 67, you've paid $28,000, but if you haven't been disabled, you get nothing. This way, and for these people that say, well, what if I don't become disabled? I don't think I'll be disabled. Well, this is a way to beat the insurance company at their own game, or have your cake and eat it too. You pay the extra $357 for return of premium. Now your premium is illustrated as $1,200. At age 67, that's $40 grand. But if you've had no claims by age 67, you get your entire $40,000 refunded to you income tax free. Or if you had 10,000 in claims, you'd get the difference, 30,000. And if you look at the rate of return for what you're paying, that $357 a year, that's a 6.75 after-tax return on that money. And today, that's an outstanding rate of return, guaranteed every year. The only thing that can impact that is you having a claim. Now, the other thing in every DI quote you receive is a choice of plans. What we quoted is in the blue box, 30-day period with return of premium. That adds up to that premium we outlined of $110 a month. If they wanted a 5-year plan, if they want something longer than 2 years, you can see the rates for a 5-year plan. That's going to be about $150 a month with return of premium, about $110 a month without. So they could have a 5-year plan for $110 a month without return of premium. If you go to a 90-day wait, it'll only be $68 a month, $69 a month without return of premium. There's a 10-year benefit period. There's age 65. So start with the affordable plan. You want the price to be pleasing to their eyes, and let them choose to go with the 5-year plan or 10-year. My cousin, he told me that, it'd be my luck if I'm disabled, I'd be disabled at age 65. He went with the age 65 plan, not the 5-year plan, which is what I suspected, but I wanted to make it affordable. The first thing that he saw needed to be affordable. I showed him a 5-year plan. He's a nurse anesthetist. And he, of course, went with the age 65, 67 plan. Let them choose to buy more. Something is better than nothing. They need to have at least a 30-day, 2-year plan. That is a lot of benefit. It comes quickly, and it's going to provide a lot of relief to they and their family. So step 4 is to take the application. Just like I'm talking, convince them to apply for something. It takes 4 to 6 weeks in underwriting. Well, I got to talk to my wife, or yes, I got to think about it. Well, let's get the app in underwriting. Clearly you can make up your mind in 6 weeks, whether you want the 2-year or the 5-year. As long as they agree, I need to have something, my family's worth protecting, get them to start the application. And most apps today are going to be non-med. Illinois Mutual goes 3,500 non-med, covers a wide range of people. Principal now is going up to 10,000 a month non-med for certain age groups, up to like age 60 or 55. I believe it's 55. So you can write a lot of disability non-medically today. And once they agree to the cost or some type of plan, or they might be thinking which one they want, but they know they can afford a 2-year plan, encourage them to apply. And set expectations. Not all policies get issued, and many more have modifications. Disability insurance is not easy to get, and that in itself might motivate people to apply, because they want to know if they can get it. It is difficult. Prepare them if they've got a bad back. They might very well have a back waiver. If they're taking a lot of medications, something could be excluded. And it's best to bind the coverage by collecting 2 months with the application. So if they walk out the door and they get hit, they've got conditional protection. Owning disability insurance provides a lot of peace of mind. It is so important. And tell some claim stories. The Plus Group, we've got a lot of claim stories. We've held a lot of DI days where we have people like Roger Sweeney or Doug Waters, who works in the insurance industry and became disabled. These people have tremendous stories. Roger Sweeney, he says he didn't lose much when he became disabled, just everything he owned and his income and his family. Most people that get disabled become divorced. Very sad what happened to Roger Sweeney and so many people, that we can share their stories with you. Something is always better than nothing. Remind them of job A and B, get them to make that agreement. And these business owners in that say, oh, I'll just pay myself. Well, when's the last time they took a month off? If it's so easy to pay themselves when they're not there. They have to be there every day. They haven't taken a month off. They haven't taken a week off in the last 10 years. So talk to them about the importance of income protection. Focus on family, on the financial, emotional consequences. Ask them, is your family worth it? Is it worth 2% of your income to protect yourself and your family? And I think most people will agree with you and I that yes, it's definitely worth it. I have all the disability that I can buy. So we're getting near the end, and I just want to say there are a lot of ways to help your career, help people, and grow your income in big ways using disability insurance. And to talk about the big opportunities and larger opportunities, the limits have increased for high-income people. There might be high-income people that you've been afraid to approach about certain things. Well, you've got a reason to talk to them, because we can issue more disability than ever before now. We can increase their disability. They might have 10,000 a month, 20,000 a month. We can get them another 10,000 a month. If they're making over 500,000. We have increased non-med limits. And don't forget the business products. How many life insurance buy-sell cases have you sold or worked on, but they have no disability? And it's worded right in the agreement that if you're disabled, you have to be out. where's the money going from? Overhead expense sales. Remember, overhead expense is a valuable product. There's only two outcomes of a disability. You're either going to recover or you're not. And with disability overhead expense, which my grandfather invented in 1955, you will have either a business still worth selling if you don't recover. The other thing an overhead expense policy does for you is if you do recover, you'll have a business to go back to. Without overhead expense, in a matter of 6 or 12 months, your business will be gone. So the overhead keeps your business going while you try to cover term higher. Key person, coverage for loans. There's a lot of needs for disability. Layering on top of group LTD, disability buy-up. And then the beauty is if you're working with one person and you sell one person, many companies have multiple owners, multiple key people, multiple engineers making over 100,000. We just did a big engineering firm. At 3 people, there's a 20% discount. So that's a reason for you to get referrals or work with the owner or work with HR and do an executive carve out and write 3 or 5 people at once. And there are also policy discounts. If someone buys individual and overhead, they can get a discount. And if we get into enough lives, 3, 5, or even more, we can go guarantee issue. So there is no underwriting. There are no exclusions. There are no ratings. The guy with a bad back gets covered. The guy with diabetes and overweight gets coverage because it's all guarantee issue. And we can do that with individual disability at around 5 lives. We've got Reliance Standard Group at the bottom where we can do it at 2, employer paid. But multi-life sales are a tremendous way to generate income for you and protect a lot of wants with disability insurance. Again, such as these multi-life carve-out cases or voluntary programs. You've got GME programs, which are known as graduate medical education programs, which are designed for medical residents and residency programs. We can write them with discounts. We can write them guarantee issue in certain situations. So if you have contacts with law firms, medical groups, medical colleges, any number of opportunities for multi-life sales. So we encourage you to sell disability. It all starts with a need.